The manufacturing sector is showing signs of some strains. According to the ABSA Purchasing Managers Index, the PMI, this points to some loss of momentum in the recovery seen over the last 2 months. The index, which measures the health of the sector, declined by 4.5 points to 48.1 index points in November 2024. This is down from the 52.6 index points measured in October. ABSA says this is not unexpected because the PMI has tended to be volatile this year. And while local inflation and interest rates have come down, demand remains unpredictable. According to ABSA, these results reflect the challenges facing South Africa's manufacturing sector as volatile demand and cost pressures weigh on activity. It adds that while global demand offers some support, a weaker rand and domestic uncertainties continue to pose risks. For more, I'm joined by Miyelani Maluleke. He's a senior economist and the head of South Africa Macroeconomics Research at ABSA. Very good afternoon to you, Miyelani. So you indicate that the PMI has been fairly volatile this year. So what do you attribute to the lower headline reading in November?
Yeah. Good afternoon, Nompo, and good afternoon to the listeners. Look, I think when you look at the results of the latest survey at the headline level, certainly very disappointing. We have a PMI that is back below 50 again after 2 straight really good months that we saw in September and October. But I think the point that we're trying to make here, Nompo, with this report is that I don't think that we should be looking at this latest print as an indication, I think, of a sudden renewed bout of weakness in activity in the sector, because we do know that when we look at the performance of the sector from 1 month to the next, volatility is not unusual. I think the key thing for us is that when we look at the performance of the PMI over the last few months in aggregate, in particular, if you look at the second half of the year, there's a very clear break, I think, from what we saw in the first half of the year. And I think what we're seeing more broadly in the results of the second half of the year is that this is a sector that's relatively stronger. Production levels do seem to be firm. And I think this is actually what we're likely to see in the third quarter GDP numbers that are going to come out tomorrow. Demand conditions are also relatively stronger relative to the first half of the year. So yes, a little bit of a disappointing blip in November, but I don't think that it's something that should worry us too much about the future of the sector going forward.
It was interesting to see that you note higher cost pressures, but this doesn't correlate with the information that we've been getting from Stats SA on producer price inflation. Just elaborate as to what's happening in that regard.
Yeah, it's a very good point. Very slight increase again in that cost index. You're right. We've seen in PPI data that producer cost, prices have been coming down quite sharply, which I think is not surprising in this environment where, of course, the exchange rate has been relatively stronger. We've seen international Brent crude oil prices coming down, but also more importantly, Nompo, the cost of doing business for many firms who over the last couple of years would have had to rely on very expensive diesel-backed backup generation capacity. That cost of doing business is much lower right now, given that we don't have load shedding, or it's been suspended for quite some time. So I think that's really helping to give us these low PPI numbers that we've seen. We did see a little bit of an increase in the latest PMI data in terms of that cost index slightly. I think it's possible that some of it just reflects a little bit of the weakening of the rand that we've seen, particularly over the last few weeks. But I don't think that this is a signal that we should be expecting a particularly huge surge in PPI inflation going forward. I think the key thing is that when we look at the big cost drivers that many firms have faced over the last couple of years, those pressures, I think most of those pressures are certainly still quite muted right now. And we are still seeing not just producer inflation, but even consumer inflation into next year remaining relatively modest, which I think is also quite critical, of course, in terms of how the South African Reserve Bank will be thinking about interest rates going into next year.
Yeah, but then, of course, to use your language, there are risks on the horizon, aren't there? Because, you've got NERSA entertaining the possibility of raising electricity tariffs for Eskom. They're asking for 36% next year. if that should happen, that's going to immediately hit manufacturers' margins, because how much of that will they be able to pass to the consumer that will still probably be struggling? So that is a real threat, right?
Oh, absolutely. I mean, it's 36% would be quite large, and then of course, Nompu, for you, me, and many other businesses, households out there who face municipalities, that increase in the middle of next year would not be 36; it would be close to 45%. So that's really huge. But I think maybe what's encouraging here, Nompu, is of course we don't know where it's going to settle, but when we look at just in history. These big applications that Eskom has sent through, and what NERSA has tended to deliver in the end in terms of those tariff increase approvals, we've tended to see NERSA scale those back quite a bit, and we're hoping that, of course, they're going to do something similar right now. But you're absolutely correct. I think electricity tariffs for next year. A very big cost risk that we're watching. But another big risk that we're also watching, Nompu, is of course, international developments that are taking place. It's been very clear, since the election of Trump as U.S. president that, the U.S. is going to approach things very differently. It's talking about tariffs, against all kinds of countries. We don't know how much of that he's going to actually be able to push through, what the effect of that will be on the global economy and the global costs more broadly, what the effect of that is going to be on the exchange rate. There are many, many risks for sure going into next year. But as a baseline, we do remain comfortable with the view that it does look like a relatively benign inflation story. And that I think is really important, of course, not just for businesses, but also for consumers who, over the last 2.5 years, have really faced very steep cost of living pressures.
Yeah, well, it's great that you spoke to that second risk element, because that was going to be my next question. So I think we're done and dusted. Thank you so much, Miyelani, for your time and insights. That was Miyelani Maluleke. He's a senior economist at ABSA. We're going to take a quick break.